Wirtek closed the books for 2021. It's a Danish IT outsourcing company that has been listed on Nasdaq Denmark since 2006. I would tell you more, but I am accompanied by someone who can do it even better. CEO Michael Aaen, welcome.
Thank you very much, Martin.
Now, you closed the books for 2021 just a couple of days ago, but I wanted to know more about your company since it's the first time I'm interviewing you as well. I know you brought a few slides. Could you run us through and give us the brief story about your company?
Absolutely. So Wirtek, we're an IT outsourcing company. We were created back in 2001 as a spin-off from Nokia, so we have more than 20 years of experience in this industry. We've got headquarters in Denmark, and we've got development and test centers in Romania. For the past 5 years, we've delivered a revenue growth of 29% average. And in the same period, we had 47% average annual EBITDA growth. And we're in this very, very good position. When we start a new financial year, we've got 80% of our revenue base in place, so we have a very good foundation for that future growth. As for financial results for 2021, it's been a great year for us. We grew revenue by 64% to 45.4 million Danish kroner. And our EBITDA grew even better with 94% to 6.2 million Danish kroner. And very interestingly, our EBITDA margin also was very, very much up at 13.8%. So you see the graph below. We actually have increased our EBITDA year by year the past 3 years, while the EBITDA margin also has increased because we are experiencing a very good operational efficiency in our organization. Looking towards 2022, we are also expecting around 40% growth at least for both revenue and EBITDA. So we're looking at a very interesting year this year as well.
Indeed, interesting indeed. Now, as I was scanning through your year-end report, I was looking at an interesting acquisition. You bought a company called CoreBuild. I think you bought it somewhere in April, or was it May? How have you worked to merge your companies?
Yes, it's true. We acquired CoreBuild back in end of April last year and started the integration process from June. And we started integrating from bottom up by taking some of the support functions inside the company, administration, human resources, sales and marketing functions, and integrated those in without disrupting the business. And we saw great results very, very early on, which also meant we actually had to come out and increase our expectations in August last year. We already saw some very positive benefits from the acquisition this early in the process.
Would you say that the integration process is complete, or when will it be complete?
Well, you know, it's an ongoing process because we still have some sellers that have an earn-out, of course. So we got to take that step by step, but we expect the full integration to be in place by end of 2022, beginning of 2023.
All right. So are you looking at any further acquisitions, and what kind of companies?
Well, last year we also launched our new Accelerate 25 strategy, and part of that strategy is continue the growth organically, but also boosting that growth through acquisitions, which CoreBuild, of course, is a very big proof of our ability to actually do that. And I'm sure we're going to do future acquisitions as well, because we've shown we have the ability to actually do big acquisitions and also integrate them well into the organization.
So could you tell us more about this Accelerate 2021 or 2025, is it maybe, strategy? What are the operational goals and what are the financial goals?
Yes, we have a goal of by 2025 to have an annual revenue of 100 million Danish kroner and a revenue or a profit before taxes of 10 million Danish kroner. And then we have a in-between goal of no year must have less than 6% in EBITDA margin, just to make sure that all our growth happens profitable. That means we're not going to go out and do any acquisitions that may cost us our profitability any given year during this period of time.
Yeah.
Then we have a couple of operational goals as well. One of them is that we want to have one sourcing location outside of Romania. It's always a matter of handling the risk and, of course, also being close to our clients. And we also have another operational goal of having a retention rate of at least 90% in our company. We're an IT company, and we really looking for having talent. We need to keep them into the company because it's a competitive market for talented IT resources out there.
Now, I noticed in your slide as you were running through them that the EBITDA margin was 13.8%, and it had been climbing the last 2-3 years. But still, you settled on having above 6%. Is it an easy goal to be above 6%? And where would you see the margin equilibrium be? Where will it land on?
Well, the 6% was just to indicate that all our growth is going to be profitable in any years during the strategy period. And well, history has shown that we don't have a problem of getting above the 6%, even in a year like last year where we did the acquisition with quite a bit of cost also involved in that kind of process. We still managed to have a 13.8% margin. And if we look at our operational efficiency during the last 3 years, then we can see the number of billable personnel we have in the company have grown from 82% end of 2019 to 88% end of 2021. So we are really doing a growth where a lot of the people added are not overhead, but actually contributing to more revenue for the company, meaning more profits as well.
And these are the people that you want to keep. You mentioned employee retention. How do you work to keep your employees at your company?
Well, the IT industry is a competitive one, because everybody's doing digitalization today. So we are, focusing a lot on retaining our people and also attracting new people. We actually just recruited a new director for HR that's going to help us, keep up with the growth we're going to have in the future. And we also have something that many of our competitors for employees don't have, meaning we have an employee warrants program that can differentiate ourselves compared to other companies down there.
So the company's success is beneficial for the people working there then?
Exactly. Besides just getting a normal salary, they actually help creating more value through the increase in share price.
Now, you've been on the stock market for quite some time, 2006. So you've been through volatile times, and these last 2 years have been extreme in a financial context and in an operational context as well, with supply chain issues, with lockdowns and whatnot concerning the pandemic. How have you navigated through the pandemic?
Well, like many other companies, when we were standing in the spring of 2020 and not knowing where that pandemic would end up, in our perspective, we, of course, were out making contingency plans because we needed to make absolutely sure that we could handle any kind of situation there. But as it turned out, the one plan we didn't make was the one that actually made things go much better than we actually originally had planned. And I think we came out with increases in expectations 3 years during 2020. So we've actually been coping very well with COVID-19, both in 2020 and as well as in 2021 as well, where we also came out with expectations increases twice.
Now, I noticed that you have offices, 4 of them, I think, in Romania. It's close to geographically a location which has been struck by a human catastrophe, Russia invading Ukraine. Are you affected by that?
In the short run, not in a negative way, actually quite the contrary. We have clients that also have people, IT people sitting in Romania, in Ukraine, where they're actually looking for backup solutions right now in order to get them through this kind of hard situation. And of course, we'll help them do that as well. And of course, we are also very, very sad about what's happening over there. And we are also both personally as well as from a company point of view, helping invest in supporting the NGOs that handle all the refugees that come into Poland, Romania, other places.
Now, if you give us a bit of a forward-looking statement as a last question, what's your focus for 2022 and 2023?
Well, this year, we are, preparing even more for the future growth because we are going to continue this growth even above the average 30% revenue growth we are promising in our Accelerate 2025 strategy. We recruited a CFO that's going to help us implement IFRS this year. We're also going to implement a new ERP system throughout the organization that is going to help us in this respect as well. We are, building up structures in our service delivery organization, and like our new director for HR is going to help us build up the structures as well for the recruitment and retention of the people in there. So we're going to continue building up the good foundation for growing in the future as well.
Michael Aaen, thank you so much for taking the time and joining me answering my questions.
You're welcome.